What should we do with Bitcoin or with crypto in general if we expect that the economy is going to crash and we expect that stocks are going to dip from here, they are going down from here? What should we do with Bitcoin? This was a question that one of the premium members asked me one-on-one in Telegram. And I thought it's a quite interesting question. A lot of people might have that question. And so I want to discuss this here now for free, publicly in Telegram with a video, with a little bit of a walk and talk. Now, the first thing to know is that the correlation between Bitcoin and stocks is actually not as high as people think. In other words, when you buy Bitcoin and you buy some, say, S&P 500 ETFs, you have that together in a portfolio, those two assets don't necessarily move in the same direction at the same time. They tend to move in different directions, not necessarily opposite, but they tend to not really care of what the other asset is doing. This is counterintuitive. Most people think there is high correlation. And the reason why most people think that is because within crypto, you've got a lot of correlation, right? When Bitcoin goes up, a lot of altcoins go up as well. Ethereum tends to go up as well. And the same is true within the stock market, right? When stocks in general go up, then pretty much all the stocks do pretty much similar things. So they all tend to go up at the same time, they all tend to go down at the same time. But once you cross the asset class barrier, so once you're not anymore in the realm of the stock market, or in the realm of the crypto market, or in the realm of the property market, right? Once you cross the kind of asset that you're dealing with, the correlation goes down a lot. And the diversification benefit goes up a lot. As in, it makes a lot of sense to hold those different assets in a portfolio and cancel out all of that volatility, all of that risk over time. So this already to a degree invalidates the thesis, as in, if we think things don't pan out that well for the economy, if we think stocks might crash, that we should be careful potentially with the Bitcoin exposure. That's not the case. These are pretty independent variables from one another. Now let's say with that independent variable, Bitcoin is shooting up, right? Bitcoin goes higher and higher, and the stock market is also doing fine, potentially, maybe not, right? We don't know, but it's not doing as well as Bitcoin. How should we then take profit? When should we sell? Right? When is it too early to sell? When is it too late to sell? What's the right way to go about this? The first important thing is that nobody can time the top perfectly, right? Nobody knows where the bottom perfectly is. Nobody knows where the top perfectly is. A lot of people might know that we are in tendency cheap or in tendency expensive, but to time the day of the month where we are going to see the top in Bitcoin is impossible. What that in turn means that you have to decide for yourself where you want to be then. Do you want to be, as per tendency, too early, as in do you want to sell before we have seen the top? Or do you want to be too late and sell after the top? Because the way you sell is very, very different for those two scenarios, right? If you want to sell before the top, then you're basically selling into the rally. The price is rising, and on a day it went up, you're simply just selling, or you're selling part of your exposure. But that's different if you decide to sell after the top, right? If you say, I want to take this whole rally with me, I want to sell after the top, then you have to be okay with this idea that at some point you saw paper gains of, say, $10,000, and now you have to take the gains of only $7,000. Right? This is a very different psychological way to go about things. You either are okay with foregone profits, right, because you're selling too early, or you're okay with seeing that what has been a very nice portfolio gain at some point is then diminished to a degree. And so you have to set up yourself accordingly, right? So let's say you're okay with not taking the entire rally, with potentially selling too early, right? You're a bit more risk averse potentially. What you could then do is you could use a balanced portfolio approach. So you could say, I have this target allocation of crypto in my overall wealth portfolio, and this other target allocation of, say, property and this other target allocation of, say, stocks. So I want to be, say, 20% in crypto, 60% in stocks, and the rest in property, right? Something like this. If that's your target allocations, then you can adjust, right? When now Bitcoin suddenly doubles, suddenly you've got way more percentage-wise in crypto than in the other assets. So you simply just sell some of your Bitcoin to put this into the other assets. So this is one way to take profit, and this is a way to not necessarily maximize gains, but to be relatively okay with the risk-adjusted return, right? You lock in the profit, and you never have to tell yourself that you lost it all again. But then there's the other approach, right? Where you say, okay, I want to time the market a bit more. And I'm okay to sell after we have seen the peak. In that case, it makes sense to not be so reactive to the price, but to look at potential models that have been that worked relatively well in the past to predict those tops. So what worked well in the past is, for example, some kind of logarithmic regressions. What also worked relatively well is the value days destroyed metric, as in looking what are long-term holders doing, are long-term holders selling. What also worked well is to look at the number of transactions. Are the blockchains currently being clogged up? Are the gas fees all super high? Those kind of things, right? Because those kind of things happen normally at peak excitement. And that's then when you sell. So what you're looking out for in that case, if you want to ride the entire wave, is you wait until the transactions clog up, right? Until there's peak usage. You ride this all the way up, and once it cools down again, that's then when you sell. Because you don't want to sell at the very first little blip, right? Because you could see another blip and another blip and another blip. You want to ride the entire trend, but only once you see a clear turnaround, that things aren't growing that fast anymore, that the RSI is potentially going down, that transaction numbers are not rising that fast anymore. That's then when you sell. And that's normally then also when we've already come down with the price a little bit, but you made that decision beforehand, right? You consciously made the decision to sell after the top. So you either sell before or you sell after, but you need to have a plan when to sell if you don't want to ride out the waves, which is another potential way to go about things, but I think it's by far the worst, right? Especially in crypto, where we easily see 70-80% drops from the top to the bottom in a bear market. It does make sense to try to time it somewhat. You simply just have to think about how you want to ride it, when you want to take profit. So make sure that you have a very specific strategy for crypto. Don't think too much about the general market, about stocks, about the economy. These kind of things have a very small impact on crypto prices. They only have an impact if we are in a global liquidity crunch of massive magnitude, like during the Corona crash, right, where we first had the liquidity crunch in the stock market and then subsequently in all other markets as well, right? So we afterwards saw properties getting sold off. We afterwards saw the gold price going down because people monetized gold, and we also saw Bitcoin going down. Everybody needed $2, and that's why everything went down. Everything in a heartbeat correlated. But that's not the usual case. The usual case is low correlation. The usual case is that you can ride those idiosyncratic waves, and so you have to have a specific strategy for crypto, and that is, I believe, very much linked to the cycles, to the activity, and you want to decide for yourself, do you sell before the peak or after the peak? And once you've done that decision, simply stick with that strategy. If that was helpful, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. Cheers.